a lot of companies die not because they don't have money, but because they have too much money. Because when you have a lot of money and you throw money to solve a problem, you are not innovating. It's like you're trying to buy love with money. That's not the way you can get love. And when companies start throwing money at it, you have to start asking questions. Do they really understanding the problem? Again, I don't know if it's going to work or not work. I don't like those kind of fact patterns. I would say that with the caveat, Mark Zuckerberg has been brilliant acquisition person, has done really brilliant acquisition. But when I start seeing people throw money like left and right, it kind of worries me.
Welcome to the Risk Reversal Podcast. I'm Dan Nathan. I am joined by my good friend, Imran Khan. He is the founder and CIO of Pro-M Asset Management. Welcome back to the podcast, Imran.
Thank you. It's always fun to be here.
All right. So you were speaking earlier in the week at iConnections.
Yes, sir.
You've been a really interesting add to that conference because you were there in also in January down in Miami. And It's interesting because I feel like you are the quintessential long-short equity guy, the sort of folks that the hedge fund business blew up on. And you know what I mean? Like you do a lot of deep research and you get to know these companies really well and you can take bullish and bearish views. Is that fair to say?
That's kind of you to say that, I don't know.
No, I mean, you're the sort of guy I love to have a podcast with.
I appreciate
this
that.
is the sort of conversation that you and I will have over dinner or sitting around.
I thought you'd like to have me because you like me. Now, just kidding.
I do like you, but I just like talking stocks and I like talking macro.
I love talking about stocks.
All right, and then just really quickly, a plug. You started a podcast.
Yes, sir.
You were so enamored with me podcasting. All right, tell everybody what your podcast is.
So it's a conversation with Imran Khan, a conversation with Khan,
yes,
conversation. It's been great. I'm trying to, I was growing up, I was really liked Larry King show, and he would bring lots of different kind of people and was just curious and ask questions. So in a many way, I'm trying to replicate that. We're getting really interesting people. Last night we recorded Scott McNealy, who is the founder and CEO of Sun Microsystem. Yeah. We have Evan Spiegel, founder of Snap, coming in 2 weeks. We had Andrew Dudum, who's the founder and CEO of Hims and Hers. So we get really interesting people. We also had this Pulitzer Prize winner journalist who is expert of China, talk about the trade policy. So we get really interesting people, and and I'm just curious. It's a great way for me to learn and democratize what I'm learning to rest of the world.
By the way, I mean, you are one of the most connected guys I know in tech and obviously in markets. And you started out, we went through this on one of the earlier podcasts. You started out as a research analyst, then investment banker, then an operator. You were basically running Snap, took them through the IPO and the like here. So now you're managing money. Great history there. And by the way, that list of folks that you just mentioned, Scott McNealy and Evan Spiegel, they both spoke at your conference, KAHN, back in October in Dallas. And they were both really fascinating conversations. Really quickly, before we're going to do macro, we're going to do Mag 7. We got to talk about the major techs and some of the themes in AI, how you're thinking about it. And then we'll obviously kind of break down some of the names that you're involved in, some of the stuff that interests you in this environment. But really quickly on Scott McNealy. So just for if the young listeners out there, he was a CEO of Sun Microsystem. Not too different than some of the stuff that's going on. The servers that they made were powering a lot of the internet expansion in the late 90s. And this was one of it wasn't the NVIDIA of the day, but it was up there. It was a really important company. Like, did you guys have anything to talk about, like kind of some of the similarities between then and now?
Scott is a really interesting guy. I think a lot of people don't know, younger people don't know him because he basically, got married, later at his life and had 4 kids, and he wanted to focus on his children because growing up, his dad was not around. So he never wanted to be the CEO. And so when he got married and then had kids, his wife had kids, and he decided to basically leave the business. But he founded Sun Microsystem with Vinod Khosla, Bill Joy, some legendary people. And he talked about it, his how they created Java, how the Java was created. But then he also talked about his failure of not, recognizing Linux or building the cloud business like AWS, they could have a 3 years, head start. So
they have the infrastructure.
They had the
to
infrastructure,
do it.
yeah. So it was a fascinating podcast. It's coming up in a couple of days. So please listen.
Awesome. We'll link to the podcast in the show notes. So go check it out, follow it. And I'm really interested in hearing that conversation. And he sold to Oracle.
He sold it to Oracle. Yeah, Oracle bought it for SQL.
Yeah. Are you following? Oracle reported last night. We're recording this on Thursday morning, and the stock is up about 12% in the aftermarket, and or actually today in the market. And part of that strength in the quarter was their cloud business. And obviously some of these big cloud providers are kind of offloading some of the compute or the workloads that they have from their customers over to Oracle. Is that a name that's interesting to you at all, or no?
No, I think like everything is interesting to me.
Yeah.
So I think the most interesting thing is this AI trade, right? And there's a significant demand for AI infrastructure, right? The demand is growing so really fast. I think I saw somewhere that OpenAI is now run rate revenue of 10 billion.
Yeah.
Right. So this incredible demand growth in AI infrastructure, a lot of these companies are being benefited by that. I guess the big question is how long this will last.
Yeah. All right. We're gonna get to all that. And I want to, at some point, I want to also ask you about OpenAI and valuation and the revenue run rate versus, let's say, a Palantir in the public markets. Similar sort of value, no, not similar valuation, similar market cap, if you can call a market cap in the private markets relative to something in the public markets. Well, we'll hit that in a second. Let's talk the macro. Yesterday, the big news of the day was that the trade negotiations in London between us and the Chinese, they reached some sort of framework of a deal. Since you've been on last, a lot of hell broke loose, right? And it seemed like almost self-inflicted. And let's talk a little bit about trade. You obviously know lots of folks in China, and you just mentioned somebody that you had a conversation with on the podcast. What is your take about what's gone on, the reasons for essentially launching a trade war that started with some of our biggest trading partners who are our allies, the lack of deals that we have with our allies, but then this sort of framework that we supposedly have with China? And I'm just curious, what is your thought process of that? And we can kind of bring it back to the economy and the markets.
Yeah, listen, I think, so let's look at facts, right? So why do you need trade restrictions? You need trade restrictions because, one, it's taking jobs away from America. Number two reasons you need trade restrictions because you are depending on some other countries. If they're adversarial, that might create some shockwave. Those would be the two big reasons. And then the third would be that, U.S. is losing manufacturing ability. But here are the facts, right? So if you look at U.S. is actually still a manufacturing superpower in the world. We are second largest. Third largest is significantly behind us. Yes, China is bigger than us, and they exceeded us, but we are still a manufacturing powerhouse. It's not like that U.S. is not producing that. The second question you need to ask, are we really losing a lot of jobs? I think the number I saw that over the last decade, the U.S. manufacturing lost roughly 2 million jobs. So it sounds a lot, but in any given month, we're creating 200,000 jobs. And that 2 million jobs that lost, that doesn't count into consideration that creating this open trade, it also created a lot of new jobs in the U.S. market. And then going back to that we're losing to China, and that's why we need to have a trade restrictions. And the World Trade Organization joining really impacted us. That also doesn't hold truth, because if you look at U.S. has been losing manufacturing market share way before WTO, China joining WTO. And I think the reason this whole trade thing gets a lot of attention, if you look at all these jobs that got shipped out of the US, that really happened in states like Ohio, Pennsylvania, and there happened to be the battleground state. So on a disproportionately, it get much more political attention than economic attention is needed. Now, saying that, I completely agree that there are areas like if it's pharmaceutical or it's important for our national security that we do need to bring it to the U.S. But really getting into a trade war with countries that can't afford to buy American product,
Yeah.
I don't know if that does any good to us.
That's such a good point. It's like, okay, so there's a country that they're 30% of manufacturing for the world. They don't have a consumption sort of model like we do. They have a 40% savings rate versus our 4%. It's essentially planned economy, right?
Like talking about China.
Yeah. And so it's like apples to oranges if you think about
Yeah,
it. Right?
Listen, I think China, I understand the risk of China. It is by far probably the single biggest threat to American hegemony in the world. So we do have to be careful about China. There's no doubt about it. But I think the issue is, again, do we really care if China makes my socks or not?
Yeah.
I don't think that's relevant, because we rather be focused on how can we be more progress on AI, create more new jobs around that and things like that. But anything that impacts our national security, pharmaceuticals, healthcare, I think we should try to figure out how we diversify our risk. But I think one of the things that I thought was really interesting on this trade war, that really going after countries that are very poor countries and they can't afford American car, right? Like you cannot never have economic balances with those people. So that's I thought was a little bit misguided. So I think execution could have been better with this whole trade thing.
But let's go back to like the national security implications of this. And so we all agree, and COVID showed us this, like the dependence on supply chains from China and some other folks, like in other places, was a real problem. And you have some sort of disruption, and then all of a sudden you see like, holy shit, like we were relying on that sort of stuff. But when you think about, let's say, rare earth materials, that's not something you can reshore, right? They own that, they own the rare earths, they own the processes, right? And they have a lot of leverage over us. And so does that sort of scenario make it that, we're going to actually have to export some of our best technology to them to make sure that we access, that sort of, listen, those are the building blocks of some of the stuff that's really important to our EV business, to autos in general, and some other industries. And so I thought all of this started where we didn't want them to get access to our best technology because it's going to find their way into their defense and intelligence apparatus. Isn't that like a big part of this? And then if we have this sort of framework where we're going to go back to exporting that and they're going to go back to exporting to us, aren't we right where we were on April 1st?
Yeah, we'll see how that plays out. No, I think you made some good points. Definitely make some good points, and I think the world is so connected right now. Yeah. It's really hard to disconnect the entire world.
Do you think there's a way, and folks don't really kind of talk about this too much, to find some sort of middle ground? Like, yes, you just said they're the biggest threat to our hegemony, right? And I think we can all agree. And then I think going forward, it really is going to be a battle for AI and the like. But when you think about it, like we see this war going on in Russia and Ukraine, it's being fought largely by drones. Like there's folks on the ground, but all of our drones, all these components come from China.
Yeah, and that's why we need to build them in the U.S. or nations that are friendly to us.
Yeah. All right. Agreed on that. All right. So let's talk about, what we're likely to see. Let's just say trade goes on the back burner. Let's say we get Canada, we get Mexico, we get EU, and then some of Japan, some of these other important sort of allies and trading partners. Let's just say that goes on the back burner. Let's say, tariffs end up being a bit higher than they were, just 6 months ago or something like that. What do you think it means for the U.S. economy relative to the global economy? We had the World Bank come out earlier in the week talking about talking down growth expectations here in the U.S. We had the OECD do that last week. What's interesting to me is that the assumptions by both of them, and I don't know if they're good forecasters or not, is that all of this is going to weigh heavily on our economy relative to the global economy. And you would think it would have been the other way around.
I think forecasting is so hard, but there are a lot of puts and takes, right? So I think what's going on, as you pointed out, tariffs going to be a little bit higher. That's inflationary. But at the same time, assuming there doesn't, I woke up this morning that things are not going that well with Iran. But assuming there is a Middle East war doesn't break out, we have seen the oil prices has coming down, the shelter prices has coming down, so that's actually created deflationary pressure on the on the CPI. I think we still expect to see a lot of deregulations, so that's going to be a deflationary pressures. The consumers are still very, very strong. Like all the data we see, unemployment numbers still pretty low. Our economists think that probably we're not going to see a rate cut in June and July. So. So I think, there's a lot of puts and takes. If everything being equal, yeah, I think if tariffs are a little higher, that's inflationary. But there's a bunch of other things going on. So I think, my view on this thing is that I have an open mind, look at the data, and look what data is telling you at any given time, because there's so many different things going on at the same time.
Yeah, and just on the macro, and we'll kind of close it here, and we'll kind of talk about some themes in the stock market. But you have a situation where, yeah, you just mentioned the CPI is coming down. The Fed is not likely to cut interest rates until September. You would think that the 10-year at 4.37 or something like that, relative to 4.5 just a week ago or something like that, would be good and a tailwind, I guess, for the economy and for the markets. But you also have a U.S. dollar that's breaking down. It's trading at levels that we haven't seen since early 2022.
Yeah, and which is inflationary.
All right, so let's just talk really quickly about the dollar and what it means as you think about investing primarily here in the U.S. market. Like, do you have a lot of exposure to U.S. multinationals? Do you mind, like you must like the fact that a dollar is coming down if you do?
Yeah, again, yes, it's incrementally positive for a lot of the large U.S. companies. It also interest positive probably for like Latin American companies that report in the U.S. dollars or trade in the U.S. market. It also probably fine for a lot of European companies. Yes, I think it's incrementally positive. But dollar, it might give you a trade, but it's not necessarily a step function improvement to get really excited about the stock.
Yeah, what you just mentioned, though, with dollar going down, yields going down, it is inflationary. You put some geopolitical stuff in there. You just mentioned Iran. Crude oil is at $67.50. It was $55 a month ago. You know what I mean? So there's a lot of potential, for obviously Trump is out there again trying to pressure Powell to lower interest rates. If you were to do that, you could see inflation, which we just saw in the markets, like the 2.4% print in the CPI, and they're trying to get to their 2% target. This is the Fed, but there's no indication that they are dying to cut rates right now, and that's kind of the pressure. You know what I mean? Like, we have to wait a few months to see whether that happens or not. All right, let's talk about the big theme here. And you and I have talked about this a bunch, generative AI. This is something that you are not a Johnny-come-lately to. This is something that you've been focused on for years. How are you thinking about like where we are? We can think about it through the lens of the Mag 7. Obviously NVIDIA was the way to play this for 3+ years. And I know that, without getting in the weeds, this is something that you've had exposure to. Microsoft in the OpenAI relationship, it's back towards its all-time highs. Microsoft, you think about that. What are some of the other, but then there's losers. Google has been something that folks have not felt particularly good about as it relates to the performance of their models, the integration of them across their platforms and the like. What's sticking out to you right now? We had these 2 years, 25% plus gains in the S&P, and now here we are. We're basically have an S&P that's up 2.5% and a NASDAQ that's up about 3% or 4% on the year. How are you feeling about this? Is it likely to continue to power the sort of gains going forward that we've seen the last couple of years?
So I actually thinking the world a little differently now and taking a little bit longer term view. I know it's really hard it's funny when hedge fund manager come talk, I'm taking a long term view, but I am actually, because I think it's such an interesting time, right? You were seeing, there's a lot of geopolitical things going on that will make day to day you have to concern about the risk and all these things. But I also think for the first time, that I look forward to next 5 to 10 years, the amount of innovation that's happening, it's going to be incredible how we live our life on a day-to-day, and that will create significant amount of value creation and value destruction. Why do I say that? So this is the third platform shift I have seen in my life. So when I first graduated from college, people were building internet website. And if we look at the internet website, which companies, now that we have a 30 years of history of the first commercialization of internet in 1994, 1995, which companies created the most value? The companies that created the most value at that time, if I had a time machine and go back 30 years, it's not like the companies that created ISPs or the companies that sold optical infrastructure for internet routers, The companies over the last 30 years created the most value that took an existing boring industry and fundamentally create massive productivity gain out of that, right? Because ultimately you have to drive GDP. So what is this? When I was to travel in 96, 97, I had to go to a travel agent, online travel created like massive amount of wealth. Or I had to drive somewhere or look for something, I had to go to Yellow Pages. Google, the information, bringing information to you, created tremendous amount of value. I used to go to DVD rental for Blockbuster. I'm that old these days. But you had Netflix. So those created the value. So the second platform shift really came from apps. Right, Steve Jobs. I remember buying the iPhone on a very first day, and I was blown away. And then, obviously after Steve Jobs, at first he resisted, but later Apple opened it up to other apps. And if you look at it, who created the most value at this whole entire, obviously Apple as an app ecosystem owner, but the other guys who created the biggest value is, again, disrupt the existing industry. I used to call when I was an investment bank analyst to order food. Now I use DoorDash. You used to call taxi. Now you call Uber. You used to talk to people on the phone. Then we start using Snapchat, So I look at AI, people always talk about AI. To me, AI is the wrapper, like the apps or internet. The question is, who will take the AI and fundamentally really, really going to change the world? And I'm looking at the 5 different really, really large categories that I think ultimately over the next decade, we need to find companies like that way. So one is digital workforce. How we work together is dramatically changed. This digital workforce like agentic AI, robotics, that's going to be pretty, pretty big. Second, transportation. I think how we commute, is fundamentally going to change. And that's a huge opportunity. And third, space. We talked about drone. You cannot shoot down drone with missile. You need laser, So the defense and space is going to be a very, very, fintech. I think these big banks, have been protected by the government because of regulations. So that's, I think, another big area. And then the healthcare services, right? Because the way, a lot of people, like my dad passed away 2 years ago of cancer because of people didn't diagnose him. There's so many people die because not of the disease, but we don't catch it early. So how we can bring, and on many places, like I was talking to somebody in Boston who worked for a big mutual fund, and she was telling me getting a doctor's appointment in Boston takes 6 months. So we fundamentally need to change healthcare delivery system, screening and things like that. And that's where AI is going to play a big role. So I am actually really, for the first time, in probably decade, I'm like, there are some really, really big category, and that is where I think I'm trying to focus on.
I love that. I love all of it. Where are you going to find the opportunities, let's call it on the application layer, right, on top of this technology? Is it going to be with these large incumbents? Obviously, there's the smartest people in the world are either working at some of these biggest tech companies here and in China, obviously, but also, they're gone to the private sector, right? They're trying to build companies from scratch. Where do you think a lot of that innovation across those 5 different verticals comes from?
I'm going to be trying to be a little controversial, and
Love it.
Only time will say. But, I think when there is a big disruption, the big guys not always win. Yeah. Some will win, but not everybody always win. So if I have to put a betting dollar in, we're not going to see same kind of innovation out of the all big 7 names. And the reason is the big companies have a couple of problems. Number one, as you big and fat, you move slowly. Yeah. And these companies are just not, they're not fit. They still have too many people's decision making is slow. Second, when you have too much money, you try to solve all your problem with money. Like look, I didn't love what Meta did with Scale AI, right? Like literally $24 billion to buy 50% of a company that just do data labeling so that you can get the CEO. So to me, it sounds like a smell desperate.
All right, but let me ask you really quickly on that. So they have a lot of money,
yeah,
$20 billion, whatever it was. That used to be like a large acquisition. This is just to get 50% of the company. It's an acqui-hire. Does it matter if they just wrote that off in a year, like if it goes away, or is it something more of a systematic that you?
No, it's the mentality, right? I think a lot of people, a lot of companies, and I tell that a lot of startups also, and nobody listens to me, it's fine, that a lot of companies die not because they don't have money, but because they have too much money. Because when you have a lot of money and you throw money to solve a problem, you are not innovating.
Yeah.
You just you think that you can solve. It's like you're trying to buy love with money. That's not the way you can get love. Money is great. Like, don't take me wrong. I'm a hedge fund guy. I like money. I'm not going to say this, but money doesn't solve every problem. And when companies start throwing money at it, you have to start asking questions. Do they really understanding the problem? Listen. Again. I don't know if it's going to work or not work. I don't like those kind of fact patterns.
Yeah.
But I say that with the caveat. Mark Zuckerberg has been brilliant acquisition person, has done really brilliant acquisition. But when I start seeing people throw money like left and right, it kind of worries me.
Yeah. Yeah, you can go back and look. There's probably very few tech companies that have had a successful M&A. Instagram, WhatsApp, Oculus. Am I missing any other big ones there?
Yeah, I don't know how great Oculus was, to be honest.
But it was $2 billion.
It's $2 billion. Yeah. But listen, past success is never an indication of the future success. And the key thing is that, I've been very fortunate about working with a lot of great founders over the last 25 years, incredibly blessed, But I think one of the biggest thing you really have to understand is that when you are young, you are much more connected to the business. As you become big and big, you are less and less connected to the business. So your instinct is not as grounded, and that's why a lot of the companies fail. And so again, I'm not saying Mark is not like that, but the key thing is, I think a lot of these companies are too big. They're trying to hire too many people. Again, they're trying to hire a lot of people. They're throwing a lot of money to these AI engineers. I also see that, like I was talking to a founder friend of mine, he told me that, a while ago, that he had to fire 10 out of the 15 people that he started his business with.
Oh, wow.
And I was like, why? He's like, these guys made way too much money. They were not working. And all they did is talking about their house and their cars. So when you pay people a lot of money, and, are they all motivated? Again, I really hesitant when people try to solve problem with money.
Yeah.
I think innovation doesn't come from money, because innovation comes from really deep passion about solving a problem.
Yeah, it's funny. I met one of the Whiz founders a couple weeks ago, and this guy, he looks like one of the engineers, you know what I mean, that's walking out of any of these startups. He's just grinding, he looks like the money doesn't even matter to them. I mean, you think about it, they just got acquired, or they're hoping to get acquired for $32 billion. These guys are going to be billionaires, and they're acting still like they're just kind of grinding a little bit.
It's such a competitive business. And I talk about my business, right? The moment I'm not paying attention to, I will lose money, right? You gotta be on top of your work because it's highly, highly competitive. And I'm not saying these guys are not there, but I think the key thing, so answer your question is, are these big guys gonna win? The answer is they are well positioned to win. But, if history teaches us anything, when the platform shift happens, then you see disruption, and you see dislocation, and there are newer players win out. That's always the case. And, like, let's look at the app, revolution. Yeah, Meta completely, incredibly transition to it. Kudos to Mark Zuckerberg. Google did really, really well. But we saw other companies come into this. Like we had Uber became a $100 billion company. We had DoorDash. We had newer businesses. Same thing happened with online. Walmart, of course, very, very survived. But then Amazon came along and took a lot of other companies out. So I don't think the new platform means that the old guy is going to go away. But I also know it's going to create new opportunity for new players.
So those 5 sort of verticals that you're focused on, where you think the most innovation is going to happen, you just mentioned, let's talk about space. Let's talk about transportation, as you just mentioned. And then let's throw innovation in and around compute and the like.
One of the things that what I'm looking at is that companies, I love to look at businesses. I always like to, I coined the term called, other people might use it, but AI arbitrage.
Yeah.
So what is AI arbitrage? AI arbitrage is, in my mind, are companies that have, the components that need to be very successful in AI business. So what are those? You have a lot of data. You have big distribution. So you already have a big customer base, And then the third, you have a very technology savvy CEO. I think if you look at, app revolution, a lot of the CEOs are not engineers, and you didn't need to be, But now I think if you look at in AI, you have to have a strong, deep domain technological leadership. Otherwise, you just can't solve. Like, I can't go hire a bunch of PMs to, and put out performance. If you're a hedge fund manager, you have to good at picking a stock, right? Otherwise, you just can't outsource the core component of the business. You need to know, I always tell people that you need to know the core function of your business. If you don't know, how do you hold people accountable?
Right. I want to get to how you pick stocks because I think that's a really interesting conversation, but I want to kind of wrap this kind of AI conversation up with the incumbent. So Exhibit A right now is Apple. Okay, and just everything that you just said, okay, like how these companies need to be run, what's in their DNA, how they think about, these big platform shifts. And this is obviously a company that defined that mobile, social, platform shift. You just talked about applications and what that meant for kind of this whole ecosystem. How do you make sense of a company that over the last couple of years has not seen their main product growing, right? iPhones are flat. There's really no reason other than shinier screens or better batteries to upgrade right now. It's become a utility and a very expensive utility, a staple. And how they just missed this? Do you think they can play catch up? And I guess, you could say, okay, well, Android, it's not that sleek as far as the integration that they've done with AI. I'm just curious, like, how you think about this, because if one of the big stories to justify the multiple that this company is trading at when it's not growing anymore is that this, service layer, this service is going to be a big driver of the valuation going forward and the reaccelerating growth. How do you think about Apple right here?
One of the things that I was hoping out of Apple is really articulate from Tim Cook, what is Apple look like in an AI world? I don't know. Maybe I missed it. I haven't seen it anywhere. No, I think, this is probably another company that is, very cautious, and listen, I always 10 years ago, I told somebody that there is a wartime CEO and there's a peacetime CEO. Over the last decade, I think Tim Cook probably did a better job than Steve Jobs in terms of creating shareholder value for Apple. But now, you can potentially argue that we are in a wartime, and I think, I don't want to point out Tim Cook, but I think in general, you have to look at every companies that when there is a significant dislocation is happening, do we, each of the companies, if you're on the board, do you have the right kind of CEO to, right kind of pilot to navigate you through this choppy water?
Yeah, and Exhibit A might be Satya Nadella coming in after Ballmer and some of the things that he did in and around this kind of
incredible execution,
right, Azure and stuff like that. I mean, Apple's has an existential threat right here, in my opinion, about getting this
not any near term, but because you need to have a platform shift, for how we communicate. So I don't think we're there yet, but because they are the monopoly on that business. But a company that is such a well positioned, you would like to probably see more innovation. Apple was the bedrock of innovation, right? And for some reason, hopefully this is not controversial. I don't know what's the last great thing they innovated.
AirPods.
Yeah.
AirPods. I mean, that's it. I just think watching that WWDC thing, it was so cringy. And you look at
less and less people talk about it these days.
There's
nothing to talk about.
Cringy and Federici. I mean, it was just so cheesy and it was so bad, and there was really kind of a bore. Let's go to Google, because this is one where it feels like, they have Gemini, and maybe like the model and the way they're going to integrate it across these different platforms is going to be great in the future, but it's not great now. And so when you think about these ChatGPT models, you know what I mean? Like, folks are going there, you're getting an answer, you trust it more and more, it gets better in how you're interacting with it, you're not clicking through the citation, right? It's a real problem for Google. And SEO models are getting absolutely destroyed. I keep hearing one after another of traffic down 50% year over year.
See, this is interesting because I'm like, my wife runs a small, very, very small software company, and I was talking to my wife, and she told me that she gets, when she gets customers reaches out to her, and she asks, where do you get the customers from? And a lot of the customers are saying, we're getting it from ChatGPT, and she was very puzzled by that. And I think the ChatGPT is actually getting a lot of data from the SEO. Mm-hmm. So I don't know. You might see less traffic data coming out of the Google SEO, but a lot of the ChatGPT traffic that picking up, ChatGPT is probably learning it from the SEO. So I don't know. It's something worth thinking about.
Yeah, well,
I'm not a technical guy.
That is interesting. I mean, it's not something that I've heard, but I keep hearing from folks, that they're just getting much less traffic direct to it, and then I keep hearing more and more that original content is going to kind of be the answer. If you give folks a reason why they should go to your website, it's kind of like a better top of the funnel than just paying Google to have your links. You know what I mean? Press up higher on the page. Anything else is that you want to talk about as far as? Well, I'd love to get your take really quickly on Microsoft and the OpenAI relationship, and how you think that's playing out, because Microsoft right here, Azure just saw a reacceleration of growth. They're pointing to non-AI workloads there, which obviously is great for them because they saw a deceleration, and there was a lot of hope that AI was going to be the thing. What about monetization, about co-pilots and agents? We haven't really even seen that yet. Is this a name that you think has been innovative, or are they leveraging off of like this installed base, the infrastructure that they built with Azure and the like? I'm just curious how you think about that.
I think they have a very large install base, and the security is becoming such an important factor for all these enterprise companies these days that they will continue to have a very strong foothold. And I think the Satya's, I kind of like how he has been focused on, balancing investment with, ROI, and rather than, like making large, big announcement, doing things. And so I think, I wouldn't write, I've been very impressed over the years how he operated and how he made acquisitions. Like, look, LinkedIn acquisition was a home run acquisitions, and with their install base, I think he's very grounded CEO, which I really like about that.
Yeah. All right. Let's go to your stock picking, because I think over the last couple of years, you probably could have thrown a dart at stuff in technology and made money, right? If you think of the sort of returns that we had, and I'm looking at like the Mag 7, it's a very different year right now. You have NVIDIA, it's only up 7% of the year. You have Apple that's down 20% of the year. Other than Microsoft's up double digits, Meta's up, but the rest of them are down on the year. And, you're seeing the trade kind of broaden out as far as tech is concerned. I think a lot of folks are looking for other ways to kind of play the theme, but a lot of that is going to be more sizzled and steak possibly, right? So how are you thinking about picking stocks in this environment? And give us maybe some example. Like here's a great example. Like, so coming out of this 2021 2022 period, like let's use fintech as an example, okay? And I know like you joined the board, I want to say a couple of years ago, of a company called Dave, and the reason why I'm bringing that up is because I know a lot of folks who are in similar businesses in the private market, and they had a really hard time because the way in which they raised money in 2020 and 21, when fintech was all the rage, 2022 when the S&P was down 23% or something, a lot of those names were down 70, 80% or so. And this is a name, one of the best performing stocks that I see in the market. It's a small cap stock. How did you look at a company like that, have the interest enough to join the board, you know what I mean, and then see this kind of follow through? Because I have a feeling in this space there's going to be M&A. We've already saw a little bit of it. So how are you thinking about that, and has your thesis changed in fintech broadly?
Yeah, no, we talked about fintech as one of the big theme, but I think the way I look at the stock, whether it's a small cap, mid cap, or big cap, I look for some attributions that we think can potentially re-rate the business, and what are some of the things, right? So I love when the company's gross margins get better. I love it, because if you look at pull the streets, 4,000 billion dollar plus companies, I bet less than 1% of the time Street is modeling 100 basis point plus gross margin expansion, right? And the thing is that it's very hard to improve gross margins, right? If I go become a CFO of a company, and if you have to improve your sales and marketing, it's kind of easy, right? You increase the sales target, you tell people to stay cheaper hotel, all these kind of things. If you G&A, cut the office space, all this kind of stuff. But your cost of revenue is cost of revenue. And when there's a fundamental improvement in the cost of revenue, that's, I mean, not 10 basis point, 100, 150, 200 basis point gross margin expansion, that means you are getting some sort of either better pricing power or you are getting some sort of step function improvement. And those are, I love those stocks when we think the gross margins will improve or things like that. Look at NVIDIA, right? NVIDIA last 2 years improved gross margins. This year, the gross margins went down and the stock has been a lousy stock. So that's one thing we love. we like when the companies have a new product upgrade cycle. This is what I learned in last 25 years. Street always either overestimate or underestimate a product upgrade cycle. So if you can do real work and really understand the importance of a new product upgrade cycle and the impact that may have, that is a great way to buy stock. That's like one of the second thing I look at it. I love, one of the things that I like, is the company's pricing power. What's happening with the pricing power, competitive landscape. So we look at all these kind of different things, that really inform my opinion. When I look at the sector, that what I really get excited. Like 3 years ago, we really start looking at all the companies that went public via SPAC and they blew up, and then we start looking at, okay, what are the companies that are improving margins, improving competitions and things like that. So I think those, but I really encourage everybody to pay attention to the gross margins. I don't hear much about that. The second thing that I don't hear much about from a lot of investors, people always talk about the company and the idea. And that's great, right? Like, listen, you need idea and you need, but I always say that if, I lived in LA, everybody in LA has a movie script in their pocket. But, Forrest Gump, which is my favorite movie, get made once in a decade, right? Because to build a great movie, you need great actor, great producer, great directors. You need a team, so execution has not been, people like, good thing you and I talked about execution this morning so much. Execution means a lot. A good idea means nothing without great execution.
So let's talk about the return environment right here, and maybe where you see opportunities, because if you're looking, you have a framework, right, of how you look at stocks. It doesn't really matter what industry it's in for the most part. How do you do some of that screening? And again, I know that you don't pay a lot of attention to what the sell side is saying about the stock market. Like how do you find ideas? Like our listener, is generally really interested in themes, and then they want to look at ways in which to play it through individual stocks. And we try to hit as many stocks. We try to have a lot of smart people like you on there to tell us your process and the like. So what's interesting to you right now? Let's assume we had that macro conversation. Let's assume the balance of 2025 is just going to be banging around here. Maybe we're up 5%, maybe we're down 5%. And, there's some sectors are acting really well, that sort of thing. How are you focused on finding good ideas right now?
Yeah. So first of all, I start with thinking there's two ways you lose money: permanent loss or temporary loss. So first, try to avoid permanent loss. So what does that mean? Don't invest in a crappy management team. Don't invest in businesses that the industry is in a very, very dire shape. If I look at my biggest mistakes I made as an investor, by focusing too much on valuation without understanding the business is worth anything, So valuation only matters if there is a business fundamentals going to get better. Or there is some sort of asset that nobody understands the value of it. So avoid the permanent loss. So like those are a bunch of check mark. And then really the best way to manage money and or invest over the last 25 years, what I learned is invest in a sector that's going to grow, and then if that's growth, rising, water raise every,
Yep.
is this, every boat. And then you got to figure out, okay, who are the best price taker, who is improving gross margins, who run the business operatively, who runs the business most capital efficiency ways, who runs the business better ROI for their capex and things like that. So all those kind of different metrics, we look at it and then we try to find the business. But I think the best way to answer your question, I think the big caps, this is the year it kind of feels like 2018, that you got to find idiosyncratic ideas to make money, as opposed to buying really big cap names, because the big cap names are also as incredibly, every mega cap names has their own problems, right? So for NVIDIA case, you have a China restriction. For Google case, as you pointed out, the competition on search. For Apple case, again, we pointed out what's the next, iPhone is not growing, so you can go through. Meta seems like their Llama thing didn't really work out, at least what I read on the press, and so they had to go hire a new CEO, right? So every company seems like has their own challenges. So I think you got to find, if that's the case, it's harder, and they're also very exposed to macro, right? Because they're so big. If you're big, you're exposed. So I think you got to go find idiosyncratic ideas that's less focused on macro, but has improving fundamentals, and they're exposed to a category that you think going to grow next 5 to 10 years.
All right, that's a great segue, and this is the last thing we'll hit. I know we got to get out of here. So you're talking about idiosyncratic ideas. You laid out the sort of 5 sectors that you think are going to be most impacted in a positive way, right? Or disrupted, if you will, by generative AI, and you're looking out, let's say 3, 5, 10 years, that sort of thing. Do you stray far from tech? Because if you just mentioned like healthcare services, for instance, is that an area where you are trying to actively find, companies that will actually take this technology and they're going to have those step functions that you talked about, and it's going to take a little while though to be maybe appreciated in the markets? Do you go far from tech, and do you also believe that at least in the stock market, it's one thing to say that these industries and then there's companies that are going to benefit from this, this paradigm shift, but how do you think about it in the stock market? Are there ways to, like a UNH, this stuff, like this company's had a lot of problems, obviously, in the last, it's been cut in half or more so, some big issues, but will they be able to harness this technology and, take the issues out?
Yeah,
right?
no, so I'm looking at companies that, so I'm sticking with tech,
Yeah.
The companies who, because I think, that's my area of expertise, so I don't move away from where I know last 25 years, the only thing I did is tech. So why try to do something that I don't know? So I'm trying to looking for tech enablement, the businesses that are disrupting this category through technology, and they have a lot of access to a lot of data. They have a technology team that, can leverage those data, and they have distribution, because I think one of the biggest thing also people underestimate how difficult it is to acquire customers.
Yeah.
So if you have those, so we're going deep diving on those 5 categories, trying to find interesting idiosyncratic ideas, but I think my view, this is going to be the next 5 to 10 years play. So obviously we're going to own the names that everybody is aware of, but we're trying to find names that not a lot of people talking about, but are going to be significantly leveraged by these 5 big mega trend that I'm seeing.
All right, you talk to some of the smartest people in tech. I know that for a fact, not me. But what do you think of crypto in general? It's been this thing, it's become like a multi-trillion-dollar thing. A lot of smart people that you and I know, and I'm not suggesting like that you, just really broad strokes. Is it something that you think is going to have some legs? Are there interesting, applications that are being built on top of blockchain? Because, we went through this Web3 thing a few years ago. It was just like a lot of other crap that was going crazy back then. It obviously got absolutely destroyed. I'm just thinking from a technology standpoint, is it something that interests you at all?
So, shame on me for missing the crypto early on. I remember in 2015, my friend who is the president of Avalab, he said, hey, you should look into Bitcoin. And I was so busy running Snap, I had no time. I had never looked at crypto. No, I think crypto is real. Obviously, any business that's, growing really and disrupting, there'll be a lot of, winners and a lot of losers, but crypto as an industry is going to be around, and the technology is going to be around, the blockchain technology going to be around. I think stable coin is a huge opportunity. It's going to have a pretty significant, profound impact, and again, it's part of one of my 5 big mega trends, right? The fintech. I put crypto as a part of the fintech. I'm very, very curious. This is the area that I'm doing a lot of work, looking at a lot of different businesses. No, I encourage everybody to do work in blockchain and crypto, and I think there'll be a lot of innovation that are going to continue to come out of it, and I think listen, I think the big banks only pay attention to very rich customers. They don't really cater to the people, small, average American. They just don't. And I saw that with Dave, I sit on the board, that like people go to companies like Dave because they don't get the lending they need from the bigger bank, or if they get, they charge so much money. So I think, fintech is an area is needed because so many people in this world and in the US, it's surprising that it's still massively underserved, and the regulatory burden that has been created. So there's a big deregulations. I think, fintech industry going to thrive very well.
All right, my man. I appreciate you coming in here. You know, you always have a seat in front of a mic here. If you guys want more of Imran Khan, go to the Conversations. It's Khan, not the CON, the normal kind here. So I really appreciate you being here. We're going to put that in the show notes. Go follow the pod. I hope you come back soon.
Thank you. I appreciate it.